Hello, everyone. Welcome back to the Black Swan Capitalist channel. My name is Vandel. Versan is here with us, of course. And today we have a special guest joining us, Lynette Zang. We're happy to have you here, Lynette. So just a quick intro on Lynette. She is the Chief Marketing Analyst at ITM Trading.
Chief Market Analyst.
Chief Market Analyst, excuse me.
That's
For
okay.
the past 27 years, ITM Trading and Lynette Zang have been helping individuals uncover the truth about complex financial banking, currencies, and economic systems while building strategic and tangible gold and silver portfolios to withstand any economic crisis for their clients. So welcome, Lynette. Thank you for joining us today. So we're going to get into it.
Yeah, I'm
Absolutely.
very happy to be here.
We got quite a few things to discuss. So first of all, you already know what's happening with the banks right now. Please, we need to hear your perspective on this and what you've learned and what you know so far. So they're insolvent, right? And should people be concerned?
People should be extraordinarily concerned. It was really interesting because I just did a deep dive into the Office of the Comptroller of the Currencies Derivatives Quarterly Review, derivatives in the FDIC insured bank. And I found something so shocking because I've been in there a million times. I mean, that is one of my go-to places, but I don't think for whatever reason I ever really quite looked at this. But you know what I discovered? That the banks, the FDIC insured banks, spent in the third quarter, the most current one they have out, the third quarter of 2022, $180 trillion to compress derivative trades down to $185.7 trillion. Now, does that even make, I mean, it does make some level of sense because can you imagine how many quadrillions in these derivative trades? And a derivative is just a big leveraged bet. You cannot convert a derivative bet into the underlying whatever they're going to base that bet on. And it's based, the price action is based on the price movement of the underlying, whether it's stocks or bonds or weather or other derivatives or anything like that. So for them to be willing to spend $180 trillion to make it appear that there's only 185 trillion out there, and only, I mean, even that number is daunting.
Yeah,
what
definitely.
That is, if you're thinking of a bomb and in the center, there's this really tightly compacted thing of gunpowder that the fuse is lit, and when the fuse hits it, it takes everything out around it. That's exactly what that is. I mean, that blew me away. So the banks 100% know, you know, if you listen to the talking heads, oh, this isn't about insolvency. This is about liquidity. And yet, with all of the money printing that the central banks have been doing since 2008, they have a problem with liquidity. Look at the size of their balance sheet. And by the way, they have started QE again. It's in a nice upward straight movement as the banks have rushed. So it's about solvency. It's about liquidity. And let me remind you that in 2020, or was it 2021, one of those, we went into what they call an ample reserve regime, which means that banks don't hold any reserves for your deposits. And they're not really yours once you deposit them anyway. So yes, people should be, you know, extraordinarily concerned, and they should protect whatever of this garbage they hold on to with real money, gold, silver. Yeah,
I'm with you.
They should be
You're
concerned.
Right. Definitely. No, I absolutely agree. We've been keeping up with all the latest developments. For the longest time, Lynette, we've been telling people don't have too much risk on yourself by keeping too much in the bank. For a lot of people, it's really difficult to hear because they're like, okay, where am I going to put my money? You know, And even if I decide to make some, changes and diversify, what do I do? Do I just call up a broker? Do I just pull the money out, withdraw it out of the bank? So I feel like a lot of people need that guidance right now. But definitely they shouldn't be keeping it in the bank.
Well,
I'm with you on that.
I mean, here's two things. Number one, the Federal Reserve went to the Treasury Department and borrowed $184 billion. They took 148 billion of that and loaned it to the FDIC, who then used that to make all the depositors at the two banks, SLV and Silvergate, whole. But here's the thing, two things. Number one, that doesn't impact the debt ceiling, which we've already hit, and I'm sure they're going to raise it, but even so, right? And number two, the FDIC only has reportedly, according to them, 128 billion in their DIF fund, and that's the fund that is supposed to be used to make depositors whole. So they gave them 148 billion, but they only have 128 billion. That means that these two banks alone were more than what they have in reserve to make creditors whole. Keep it in the bank. Go ahead. You like risk? You don't think you're risking, because after all, it's insured. But that is a counterparty risk. And any contract is only as good as the counterparty on the other side of that contract.
That's right.
Gold is the only financial asset, and this is not according to me, this is according to the largest bank in the world, the Bank for International Settlements. It is the only financial asset that runs zero counterparty risk. Everything else is counterparty risk. This is not the time to be running that.
Right.
So, when you say, people don't know what to do, I really have been groomed for this moment in time. And, I've been in these markets on some level since 1964, and I was born in 1954. So yes, I started when I was 10, but I became a stockbroker in 1986 and then started studying currencies and currency life cycles in 1987. And I was at Shearson, which, what happened with them back in 2008, right? But I am so grateful for my age and my experience that I've had, because when you start to study currencies, and particularly currency life cycles, so you're looking at a much bigger window than the last week or month or few years, what you start to see are patterns that repeat. There are over 4,800 currencies that simply do not exist anymore. Government-backed currencies. That is, and so from all of that data, it's really quite easy to see what the next most likely outcome is. Because I guarantee you, this is not different than those other 4,800 times.
Definitely.
So personally, as an ex-stockbroker, as an ex-banker, I have a high level of comfort with that stuff because I understand the language and I've lived inside of it for such a long time. And I do not own one stock, one bond. I have some cash because I got a bill, I have a business, I have to make payroll, and that is our forced tool of barter. But, you want to do food, water, energy, security, barterability, wealth preservation, community, which is what this is about, and shelter. And it really, when you know what those patterns look like, it's actually very easy to just get yourself into a position to be in something that can protect you on the short term, and then put you in a position to take advantage of what's happening in the longer term.
Right. Well, the Silicon Valley bank crisis is really a wake-up call. And it reminds us also the fragility of the banking system. So there is an increased likelihood of more bail-ins in the very near future as banks become more risk adverse. So depositors are very likely to, see lots of losses and just the confidence in the banking system.
Oh, and they should. I mean, and they just went and paid out a whole bunch in the last quarter when there were already auditors in there that were raising all these red flags, and yet they were still able to triple their loan base to those that have been chosen to win, right? Whatever partnership they had in there. And once that money's out of the system, well, I mean, what do you have? You have garbage. And the only reason why they didn't do there are a couple of reasons why I think they didn't do the actual bail-in this time. Number one, I think it's interesting that it's all these venture capitalists and technology companies in both of these banks that had a minuscule part of their deposits that were insured, the lion's share that were uninsured. But who is supposed to help the Federal Reserve bring out the CBDC? These guys.
That's right.
I mean, isn't that interesting that they got bailed out?
Yes. There is also a very important point. I don't know if you saw this, but when Senator James Lankford was having a discussion in Congress, in the Senate with Janet Yellen, she said, and I quote, that only selected banks will be insured. And that is going to leave, again, more depositors at risk. So this is why people certainly need to secure their funds.
And they try to use language that the average person will have a difficult time understanding. And they do that intentionally.
Yes, they do.
Yeah.
Did you have a chance to listen to the FDIC meeting that they had in November, where they were laughing about the fact
in the table
that exactly
that
they don't have confidence, and that the public has a lot more confidence in the banking system than the resolution committee has.
Absolutely. I don't know if they leaked that deliberately, because it seems very strange that got out to the people. And what's interesting about that, real quick, Lynette, is one of the gentlemen that were sitting at that table during that discussion was the head of the Securities and Exchange Commission. And he sued a company called Ripple and resigned the next day or two. And he was actually in that meeting, interestingly. But anyway, carry on. Yes, they were cracking up about it as if it's a joke.
Right. And of course, the public doesn't need to know, because the guys that do need to know have all their attorneys and the accountants, and so they'll know and they'll get into position. And then not very long afterwards, we have this. And, I've been saying all year that I thought there was going to be a crisis before June 30th, because the powers that be are ending LIBOR and transitioning that interest rate benchmark that's embedded in all, trillions and trillions. Who even knows, because it's so hidden?
That's right.
In contracts. And the problem is that when they make that final transition, which I don't think they can, they're even talking about the fact that they can't. So it'll be interesting to see if we even get that far without a massive banking crisis. And then that will just hide this next crisis that's going to be upon us when they attempt to do this transition. But everybody has even admitted now, the powers that be, that there could be an overnight, and is likely to be like an overnight shift in pricing to all of these contracts that are held on all of these banks and other corporate books.
So real quick, Lynette, who do you think, which banks are going to have more risk of a complete failure and a collapse? Do you think it would be the larger banks or the smaller banks? Is there a difference?
Smaller banks.
Probably the smaller banks first, and the larger banks would probably, eat them up or something like that, and they'll get saved.
Well, they'll get saved. Well, the assets that have value will get saved. Okay.
Sure.
The garbage in the deck that is left behind will go to the FDIC. And much as they want to say that this was not a government bailout, no taxpayer money. I mean, that's garbage. Who do you think? Even if this is, I mean, they can't do it. They got 128 billion in their DIP fund, and they're going to now charge fees to all of the banks to raise it up to what? I mean, if you look at the history from 2008 until today, they haven't done very well. I mean, it is a little bit higher, but they haven't done very well with that. So that's garbage. Yeah, it'll be the smaller ones that won't, if you listen, going back to that Janet Yellen quote, right?
Yeah, the federal.
And, you know, they did that because they thought that it would create a systemic run on the banks. But if it's just a little community bank, that's not going to cause a systemic run if they don't have these venture capitalist players in there. I mean, this is outrageous. This is as outrageous as what I saw in 2008.
But this is worse.
Outrageous.
This is probably get worse. Yeah. And
it's going to be worse than 2008 for sure.
I definitely agree with you. I know we got Sesame Street running the country at the moment. But back to that FDIC thing that you were just touching on real quick. Sometimes I get into conversations with people out and about, oh, I'm FDIC. You know, I got the sticker on the bank. It's Federal Deposit Insurance Corporation. I'm okay. I got up to 250 grand that would be taken care of if, God forbid, something happens. And I try to explain exactly what you just touched on a moment ago. But I try to tell them that's like having, you know, some vehicle and you got full coverage insurance. And when you need it, the insurance company says, sorry, can't help you out.
Right.
That's the same concept. I mean, basically, right?
Well, think about when the FDIC was created. It was created with the Glass-Steagall Act back in 1933. And that act separated risk-taking banks from deposit-taking banks and created the FDIC so that people could feel confident. It's a con game. It's all about confidence. Feel confident that they can get their money back.
Yes.
But what did we see in 99 when Clinton did the whatever it was Modernization Act and allowed insurance companies, securities banks and savings banks and deposit taking banks to merge and then sell each other's products? And not only that, but what also started happening were speculative derivatives. And we've had 3 implosions that I think 2008 is when the system died. Period. End of discussion.
Yep,
I was getting ready to retire then.
That's right.
Right. And then 2008, I mean, I had a little 2-bedroom condo that was real easy for me to just walk out the door, lock it, and off I go on new adventures. And then 2008 happened. And instead, I bought a 1/2 acre property that was big enough to handle my children. And, you know, so they came back and had to live with me. And I started to become a gardener. I'm not a gardener. That's not anything I've ever really been drawn to particularly, but food becomes the single biggest issue for most people during these transitions.
Absolutely.
So yeah, now I have a fabulous urban farm, and in March, April of 2020, I'm walking around going, okay, isn't this great? I'm just fine. I don't need to go to the grocery store. I've got plenty of toilet paper I could share. And I did. But then there were riots right near my house. And I thought, oh my goodness, there is the hole in my strategy. So I went and it took a while to find the right one, but I found a bug out location that has all of those parts of the mantra: food, water, energy, security, barterability, wealth preservation, community, and shelter. Perfect. And so, but I have been building a space that can accommodate a community of 40 of all different, you know, all different talents, because it takes a lot.
Absolutely.
To actually do that.
We're actually on the same page as you. We have actually 2 locations. This is not something we talk too much on the channel because we're more geared towards wealth preservation and, you know, capitalizing on opportunity to build wealth. But it is something that we're focused on as well. So we're on the same page with you, Lynette. Security, energy, water, community, and some, area where you can basically work together with people and stay safe and protect your family. Because I think things are going to get really bad, extremely bad. And that goes to the whole currency reset thing right now taking place.
Yes, it does.
So Christine Lagarde said that basically if they're going to lose their grip on the monetary system if they don't usher in central bank digital currencies.
Correct.
And that moves on to this transition we're seeing kind of play out right now. So
it's been playing out for a while. I mean, if you think
Indeed.
about what the world looked like prior to 2008, and you think about what it looked like, what it looks like now, I mean, that is vastly different. And these different tests to see how far they could push people. I mean, it's fascinating how they have set this up and positioned it. But make no mistake, I've been talking about the reset since 2009 after I heard Christine Lagarde, who was at that time the head of the IMF, and in a Bloomberg interview, which is, I didn't know to record it, unfortunately, and it's subsequently been deleted. But she used the term reset about 27 times in a 20-minute interview. And I thought, oh yeah, this is where we're going. It's coming. And I have a very popular, I have a very unpopular view, but it's my view. So you don't have to agree with me. But I read the NSA white paper that was, and the NSA is a government agency that was written in 96 on how to create a mint, in which they talked about how to create a cryptocurrency. And if you read that, you see so many similarities. And I personally do not think that it was a coincidence that Bitcoin came out in January of 2009.
Right.
And quantitative easing started in March of 2009.
We say the same thing, Lynette. Like Versan and I, this is the discussions we have constantly, and we're on the same page as you. It's not a coincidence. You got the housing crisis, banks going down, the economy going to crap, and then all of a sudden, Bitcoin comes out of nowhere. You don't know who created it, who did it. Personally, we think it was we think the NSA probably had something to do with it. This was a government operation to move us into this transition that we're seeing today.
Absolutely.
Yes. It's a long-term goal.
Oh, it is. Well, everything is long-term.
Yes.
They have to do it slowly.
Absolutely.
And then, how do you cook a frog, right? And not only that, but how much of this garbage would have gone into gold that went into Bitcoin?
Absolutely.
Because it's the same kind of mentality, right? It's created, I want to go around the system. But with the adoption of Wall Street so heavily, is it really outside of the system? I've had a lot of people try and convince me.
No.
Here's where they fail. No, here's where they fail. No, if you've got a good argument and you can back it up with data, I can change my mind. I have no problem with that. But when I ask them about the functionality, well, yeah, you can put it on a thumb drive and stick it in your pocket and go anywhere else in the world. So you can transfer a lot of wealth, presuming that it's being accepted everywhere.
Sure.
In a small little package. However, that's it. It has no other utility.
Absolutely.
And it just costs a lot of energy and creates a lot of pollution.
Right.
This full utility, because it is used in every single sector of the global economy. So you got the broadest base of functionality and the broadest base of buyer. That's why it's never gone to zero. What do you got with Bitcoin? It's intangible. I can't hold it. And if you don't hold it, you don't own it.
That's right.
We say the same thing, Lynette. Trust me, we say the same thing. And I agree with you. Now we have this discussion with people, and we think our alignment of thinking is similar to yours. It's based on the figures, numbers, and data. If you can present that to me and the logic makes sense, I'm with you. Okay.
Right.
But so far, after a couple of years of, intense due diligence and research, my brother and I haven't been able to see the value in Bitcoin. Okay. The truth is, whether people want to hear it or not, it's used for nefarious things that we can't even speak about on the channel. That's directly connected to certain corporations and individuals. And I'm talking about very ugly things. That's the first thing. Second of all, there's actually superior digital assets that do everything Bitcoin does, but more superior, more efficient, more much faster, more energy efficient too, which is in alignment with the whole green agenda idea. And we believe there's opportunity to create some wealth with that by owning those, but it definitely does not replace gold. Because gold
it
is
doesn't replace gold is real money.
it
But
is
here's the thing. We at this moment, if you look on the Bank for International Settlements money flower, there is a little teeny, very small, but a little teeny area that they're leaving open for digital currencies, cryptocurrencies.
Yes.
Right.
There is a much bigger area for commodity currencies, gold and silver. And this is the only area, well, that little teeny weeny area would be out of their purview, but everything else is inside of their system that they control. And look at where they've gotten us so far. I think
Yes.
they've done a fabulous job. And I'm being facetious.
No, trust me.
I think I'm being serious.
Yeah.
Well, go
I
ahead.
was going to say, as institutions, as we go digital, institutions are going to require some sort of technology that is scalable, fast, cost-effective, energy efficient, anything that's compliant also with regulatory requirements. So they're putting these things into place. And my brother and I, we see a technology. I've heard a lot of your opinions on cryptocurrencies, and I agree with you totally. Real store of value is something physical, something tangible, something that holds its value. However, digital currencies are a thing. They are happening. So there's one technology, called XRP. And this is a digital currency that offers all these features my brother just briefly described. So it makes it an attractive option for financial institutions that are seeking to streamline their payment processes and reduce their cost. So.
Well, they're always interested in reducing their costs and streamlining things, right?
Yes. So,
and I'm not saying that that digital currencies are not going to exist, or even that there isn't a place for them. I'm just not sure who's going to end up through this regulatory regime.
That's right.
And it's interesting because the International Monetary Fund did this piece, and it basically said private cryptos bad, CBDCs good. I mean, it was almost laughable, to be honest with you. So I do agree with that. I just don't know who's going to survive yet.
So on page, I'm sorry.
I had to ask this one question. I'm sorry. We'll get back to that in a second, Mindell. My apologies.
No.
So, Lynette, personally, do you think that the Federal Reserve the central banks are intentionally engineering this current economic crisis to create the sense of urgency for the adoption of central bank digital currencies?
Well, yes, I actually do. You look at what they've done and it's beyond stupid.
That's right.
I mean, for a long period of time, so it's not just they made one mistake, but they've been making error after error. And the reason is because we're at the end of this currency's life cycle. Right. Officially, there's virtually no purchasing power left in there, and we need to transition into a new system. So they have to get rid of all of the debt and all of the garbage, and they have to really crash the system. It is that simple, to create a large enough crisis so that when they bring in their solution, the masses go, okay, save me, Mr. Bill, save me. And they already have, everybody's got the FedNow accounts. That's all in place. So they can just, boom, push those CBDCs in it. Don't worry, we've got you. Here's a whole bunch of free money. There's no such thing as a free lunch and forced adoption. Yes, I 100% I agree.
Thank you for confirming.
Yeah. Now there was something I would just wanted to say real quick. So the World Bank, based out of Washington, they're actually they're owned by the United Nations. That's their parent organization. Now the World Bank published a document that I read a few months ago. It was published in September 2021. I read the entire thing. It's a ton of pages, but on page 31, they had a stable coin section. And two of the stable coins they discussed in precise detail and its use case for the central banks and financial institutions. There were two. The first one was XRP, and the second one was XLM. So these are not made for person to person. These are made for liquidity. They're a financial instrument to provide liquidity and settlement, instant settlement. So supposedly, I do know that they're trying to digitize gold. It's a goal. Yes. And we believe it might have something to do with XRP because of its utility and the partnerships the company has that created XRP with the world banks, with the BIS, the central banks. Basically, it's not just the superior technology, it's the partnerships who they're rubbing shoulders with.
Right.
But nobody's talking about it. They promote Bitcoin, the biggest Ponzi scheme. They promote Ethereum and all these, basically pieces of crap, but they never promote gold. They don't promote the digital assets with real utility, the hidden gems in the rough, basically. So it's pretty crazy, but it is something to look into for sure. How do you think they're going to orchestrate this entire transition? How is it going to manifest? Do you think there would be a cyber attack, interest rate spiral?
There could be. And, right now, well, it'll be interesting to see what Powell does. And he probably will raise rates 1/4 of a point because he said he was going to do it. And they gave away their credibility to the markets last August, wasn't that long ago. And so that's part of the struggle for global central banks is to regain some level of credibility. And in theory, if he doesn't raise the rates, then it makes people think, or this is their thought process, that it makes people think that we're in much worse shape, right? And they don't really want you to understand that. But the reality is if you look at their balance sheet in 1 week, they injected massive amounts of QE money back into the system. So what does that mean for inflation, right? It was garbage to begin with. Every single time they've attempted to raise rates and reduce their balance sheet since 2008, it has been a big fat fail. That's right. And this time has been no different. Nope, not different. So, I don't think they want you protected. They've been robbing you since the day you were born.
It's true. How long do you think we have? How long do you think, most people have to make some, quick decisions and maybe protect themselves? How do you see it unfolding?
I'd say do it today because I don't think they can make this transition that's coming up in June. And it's not me saying that it's coming up in June. They're the ones that put that date on. I never give dates. Who knows? Right? But this is a con game. So if the public loses confidence, that will speed everything up.
That's right. Right. And people will lose confidence as inflation continues to rise, because what we saw I have to go back to the Silicon Valley Bank. There's an article that it talks about how they had 24-hour notice to get their money out before the bank run started and before they put the news out there publicly. Right after that, millions of depositors lost their money, and then they went into the Senate and Congress asking to replenish the $2 trillion that was just stolen. So they stole the money, they went to Congress to ask to replenish it, and at the same time they're talking about raising interest rates. So what they're doing essentially is printing money and raising interest rates. That is the perfect recipe for disaster, which is going to cause high inflation. And when there's high inflation, there's less confidence in the currency. So like you said, this is going to certainly speed things up. So I think we're pretty close.
I think we are close. I can tell you that I'm finishing up as we speak. We're going up to the bug out location, and I've already been doing a lot of work on there. I'm finishing the hot houses. So if it happened tomorrow, I could accommodate 40 people and feed them, and it would be a little crowded because I'm not all done, but I could do it. If I had to do it, I could do it. And we are finishing up filling our freezers. So I have lots of long storage food. I have lots of dry food, and we have the hot houses that we can start to.
That's amazing.
Be able to start planting. But yeah, no, I mean,
self-reliant. Yeah.
It's critically important that you are as independent and self-sufficient as possible. And that's the importance of community. Because can I even tell you how many people will ask me if I do the gardens myself, or I do this myself, or I do that? No, I'm too busy reading, researching, and producing. I can't do it all myself, nor do I particularly want to do it. It's a lot of work. It is. So yes, I'm fortunate that I have a lot of help because I actually believe my work, and I put a lot of value to bring that talent around me to help me pull this together. So how much time do we have? I don't know. Wasn't it Ernest Hemingway that said, when he was asked how he went bankrupt, and he said slowly at first and then fast?
Well, they don't want people to be aware of this, simply because if people are aware, they can position themselves. If people are not aware, they can come in with the Trojan horse. And at the same time, with the central bank digital currency, absolutely, they could make it to where they control the narrative as far as how you think, your behavior. And that's what I think people don't understand. That's the really scary part, because that's totalitarian, and we don't want that. So certainly have to diversify your portfolio.
You do have to diversify your portfolio. And I'm going to tell you this story. It takes me back to the 60s. And at the end of every broadcast day, because back in those days, there were only television shows until maybe 10 o'clock at night. And then they would come on, and it would be the Star Spangled Banner. And they would have the words come up on the bottom, and a little bouncing ball would go from word to word to word. And as a child, I remember kind of reading, singing along with that. One day, I uncovered something where they took that message and they slowed it way down. And there were all of these subliminal, so creepy. There were all of these subliminal messages in there. The government is your friend. Listen to the government. I mean, I can't even tell you how creepy that was.
They do it on purpose.
I saw that. Well, sure, they were using subliminal messaging, but it was actually in the 80s under President Reagan when he brought, what's his name? He was in England. Oh my gosh, I'm sorry. It's toward the end of my day, and I'm kind of like,
no, trust me, we understand. It's okay.
But they actually Rupert Murdoch, and they actually formalized a perception management program. That is actually what it's called, because, and they employ the most brilliant psychological minds so that they can, when they spit out a message, it's about making you believe something so that you move forward in a way that supports their goals.
It's conditioning people, definitely.
100%. So yes, you are spot on with that narrative.
Social conditioning, and they are still doing it today. Actually, they're doing it now in other areas you never would have thought of. I'm talking about television, kids shows, TV shows, movies, music,
100%.
internet.
Well, yeah, this is predictive programming, and the CIA has been doing this for a very long time as well. So it's not a surprise, to be honest. But I think right now the world is going through, the world is going through a transition where you have some people who are awaking to all this, the corruption,
Mhm.
everything, the monetary system, how it's been, and looking for alternatives. And then you have the other side who are literally just bowing down to their corporate pimps and masters and just, going with the flow. And I think there's a real big division. So there's a lot of social issues as well on top of everything here we're discussing. So I find that fascinating.
Cool.
And real quick, Lynette, I've been down the rabbit hole. You have no idea how this almost drove me crazy. And when I started following the money in everything we're talking about, you're not going to believe this. It actually goes back to the Vatican. And I'm not kidding about that. So
well,
I got to be careful how I word it.
More people have been killed in the name of religion and tortured in the name of religion than for any other cause. And that's
true.
Not a big surprise that it goes back to the Vatican. Really,
yes.
not a surprise. And you brought up a good point though, too. You followed the money, right?
Mm-hmm.
What people need to understand, when we were on a gold and silver standard, and particularly on the gold standard, you could walk in with one thing and you could pull the gold out of the system if you didn't like what they were doing. That's why they had to take the gold away from us, because it forced them into fiscal responsibility.
Mm-hmm.
Well, if you follow, this is your vote. Okay. So if you buy stocks, that's your vote. If you stay in cash and stay in their system, that's your vote. This is my vote.
Mm-hmm. Mm-hmm. Oh, we're stacked.
Yep.
Good. Yes. Well, I hope everybody that's watching you is also.
Oh, absolutely. I've been pushing our viewers for a long time about precious metals on every platform. So I really believe in becoming independent. And the way to do that is to de-dollarize. That's correct. You don't want to be relying on a system that intends to control your future and the way you
steal your wealth.
That's correct. That too. So very disturbing.
And control your life.
Mm-hmm.
I mean, it was really interesting. I think, and I haven't had a chance to go back and just verify exactly which report I read this in, but I think it was the 2015 IMF report where they talked about autonomous driving and not just autonomous driving, but setting up the whole system. So you have smart houses, you have all of this, all of your property and your wealth held on the grid. But they specified as an example, if you miss a car payment, the car can drive away, and Ford just applied for that patent.
Mm-hmm. Really?
Is that a coincidence? Yes, isn't that
I didn't know that. Okay.
They don't intend to use it.
Sure.
They don't intend to use it, but they filed for the patent.
Same thing with insurance.
Okay.
Yeah.
Yeah.
Same thing with insurance. Yeah.
Yeah, they're really cracking down. This is a little off topic, but you mentioned the IMF, International Monetary Fund. So the company I was telling you about, Ripple, that their financial instrument liquidity token, it's called XRP. So Ripple is actually on the IMF advisory group.
Shocker.
So yeah. So when I said earlier, they're rubbing shoulders with the elite organizations that run the world, they literally are. So anyway, we try to tell people to own gold, silver, because it will protect your wealth. It will protect you and your families. But we try to educate people on digital assets such as XRP that will be give people an opportunity to create life-changing wealth, because we truly believe it's equivalent to the .com era before the Amazon and Googles were created. Yes. It's just about getting in early.
It is.
Go ahead.
And let me also point something out to you, because one thing that I have learned over all these many years that I've been in this business, at some point, all assets move to their fundamental value. The fundamental value is really based upon the single most important function of that asset. Okay. And not what you wanted to do, but what the creators wanted it to do. So gold, the single most important function of gold is to hold your wealth even over time. But
absolutely.
A rising gold price is an indication of a failing currency, and they don't want you to know the currency has failed. So they have suppressed it because you can create as much gold that never will exist as you want to.
And it brings the price
easy.
down. Price manipulation.
Voila. Exactly.
Yeah.
So gold is severely undervalued.
Definitely.
Severely. And remember, it's got the most functionality of any other asset, including digital assets.
That's why all the banks are buying them.
Correct. Correct. And history has proven, and I've done pieces on this, so I could be off a little bit, but I won't be off by much. But on average, 25 ounces of gold could buy an entire city block of buildings and all as we go through this hyperinflationary event.
Yes.
So there's a huge opportunity, because part of what I look at is dynastic wealth. And dynastic wealth is wealth that lives in families at least 300 years. And there are 3 legs to it: real estate, truly rare collectibles, and gold. And you can actually do all 3 with gold. That's not really that hard to do. I've done it. But this is what I know will survive currency regime shifts, wars, everything else. And at this point, I'm all about safety.
100%.
I'll be able to buy anything else if I hold my purchasing power. And I'm going to be able to buy it a whole lot cheaper than it is right now, too.
Definitely.
Yes.
So we had go ahead.
I'm sorry, Vendel. So yeah, real quick. Also, precious metals are about to be reset, and the Bank of International Settlements has made this clear. But when, we don't know. So there will be a reset in the precious metals market. And another thing is because it is manipulated. But if you look at the global debt as well, I think it really ties in. So if they wanted to shrink that debt, all they would have to do is really reset the gold price to what it should have been trading at, and the debt would just shrink. So it makes perfect sense. And then there's an incentive to reset the precious metals market. And that's why they're not telling anyone. And that's why they moved it to a zero risk asset, like you said.
Right. And you're absolutely right on that. And they'll do it when they need to get your confidence back, public confidence. That's when they do it. When all confidence is lost, I don't know why, but on average, it takes about 3 overnight resets before people go, I'm not using that garbage anymore. Right. Yeah. So it's very interesting, but this is my vote. This is where I feel the most.
I agree with you.
Along with food, water, energy, everything else.
Definitely. Yeah. It's real money.
Yes, it is.
Definitely. What was I going to say? Let's see. Pretty much everything you said has been amazing. We're on the same page with you, Lynette. We completely agree with pretty much everything you said. What's funny is one of our friends, he's a retired wealth manager in Switzerland, Clive Thompson. Anyway,
I know him.
Oh, okay, of course. Well, he actually said the same thing you said during currency resets. Owning those 3 asset classes, or one of them, protects you 100%. Real estate, collectibles, or gold.
Yes, but just understand where we are in real estate, because the other thing that's been happening, and you can watch the move since 71, since early 80, is they have turned every single asset, and you talked about it early, digitizing gold. Every single asset has been converted into a financial product that they can trade. So even real estate, I mean, look at how much that's gone up, but you've got a mismatch in maturity. Because
definitely.
Like this house, I've been in here since 2010. I never intend to sell it. This is a long-term hold for me. But yet on Wall Street, you can trade it every day. Yeah.
Joke.
Well, it's a joke.
Yeah. Well, real quick also, I like how you said that precious metals is still the real value here, because again, when we talk about a technology like XRP, because of its scalability, liquidity of what the purpose it is, serving the global economy, it is a representation of physical gold. So
Yes.
why would you own the replica, even though we own a lot of XRP, but we still prefer to have the physical gold, which XRP will eventually represent based on our research. So,
Well, and what you're doing is you're diversifying.
Yes.
So
That
there's a
too.
certain level too, that if you want to take a chance or speculate, and you've done a lot of your due diligence. So I always support that. When somebody has delved into something and they have a strong opinion, you need to move forward on it regardless of what anybody says. But you just want to have a properly diversified portfolio, because that's an intangible and this is a tangible.
Agreed.
Well,
No?
yeah, I think we pretty much talked about what we needed to cover today. We're, yes, really thankful, Lynette, that you were able to come on here and speak with us. Versan, any questions or anything you want to say to Lynette?
Yes, I want to say thank you so much. It's been an absolute pleasure. I've been watching you for a very long time, and I'm truly
Thank you.
grateful for what you're doing as well. And you really shed some light into my life that helped me investigate other loopholes and things that I learned. So thank you for that. Another thing I do want to share is that I have a background in botany. So if you ever need someone to do your plants one day, I'm kidding. But I love botany.
You don't have a background in botany?
I do. Yes. I
Well,
love plants.
Come on,
He does.
you did a lot of work.
So
Oh, that's funny. But Lynette, we're going to put all the links in the description for ITM trading and your contacts, so that if people want to do a strategy call, purchase some precious metals, you're excellent. So we're going to add that in there. And besides that, really, Lynette, thank you so much for taking the time out of your day to do this with us. We're going to stay connected, and we'd like to do a part 2 eventually.
Absolutely.
I'd love to speak with you. Yeah. But again, thank you, Lynette, and we'll speak to you soon. Okay.
I look forward to it.